$1 trillion in market value, gone from a single company in under 2 months. That was Nvidia walking into this week already bloodied. Then Tuesday it got dumped like nobody wanted to touch another chip. By Friday that same stock ripped 4% higher and the S&P 500 printed a fresh record close. Nothing about the actual business changed in 72 hours. So what flipped the mood that fast? One deal priced this week, one number almost nobody was watching, quietly told Wall Street the AI trade was still breathing. Stay with me and you'll see exactly which one. By Tuesday morning the selling had started before most people finished their coffee. The S&P slid almost 0.5% to 7,503. The Nasdaq took the real damage, off more than 1%. Two things hit at once. Samsung's quarterly numbers landed soft, and Reuters reported that DeepSeek, the Chinese startup that rattled this market a year ago, is now designing its own AI chip. For an index priced on Nvidia selling every chip it can make, that headline hit a nerve. The whole semiconductor complex went red together. Let that $1 trillion number actually land. It's more than the entire worth of all but a tiny handful of companies on Earth, gone from one name in 8 weeks. So in the summer of 2026, when a fresh chip threat headline crossed the wire, traders didn't stop to ask questions. They sold first and planned to think about it later. And then Wednesday made it worse. President Trump stood at the NATO summit in Turkey and called the ceasefire with Iran, quote, over. The Dow dropped 576 points, more than a full percent, in a single session. Oil twitched, defense names moved, and every screen on the floor turned that shade of red that makes portfolio managers stop talking. 2 days in, this was shaping up to be one of the uglier weeks of the year. The mood was simple: get out, ask later. One number frames the whole board. The S&P is up close to 10% this year. Sounds healthy. But strip out a handful of megacap technology names, and that number gets thin in a hurry. This is a narrow market, a few giants carrying an index of 500 companies. To understand the snapback, you have to see what was holding it up. And the single heaviest name in that group, the one everything hinges on, is Nvidia. Here's the counterintuitive part. Nvidia, the stock that crushed the market 3 years running, is up just 5% in 2026. The S&P has nearly doubled that. The most important company in the entire AI story is lagging the very index it dominates. 3 years as the engine, and this year it's the anchor dragging behind. That gap, the biggest name underperforming while the index climbs, is the tension the whole market has traded around all summer. Everyone's waiting to see which way it resolves. Here's a detail almost nobody was shouting about on Tuesday. After that $1 trillion slide, Nvidia was trading at roughly 18 to 22 times forward earnings, depending on whose model you trust, right around the S&P's own multiple, and below it on some desks. For a company that spent years priced at 72 times earnings on average, that's the cheapest it has looked since early 2019. Read that again. The most feared name in tech had quietly become one of the cheapest large stocks in the market. Goldman Sachs put one word on it: compelling. Their read was blunt: you're being handed the dominant chipmaker at a price that assumes the growth story is basically finished. And the analyst crowd broadly agrees. Of the desks covering Nvidia right now, roughly 77 rated a buy. 1 says hold. 0 say sell. When almost 80 analysts line up on the same side of a trade, that's either deep conviction or a dangerously crowded boat. This week was a live test of which one it really was. But cheap is not the same as safe, and the bears had a genuine argument. It wasn't about this quarter's sales. It was about the moat. If DeepSeek can design a workable chip, if Samsung and others keep pushing, then the pricing power that made Nvidia the most profitable hardware company in history starts to erode. And here's the uncomfortable part: you don't even need Nvidia to lose. You just need it to stop being the only game in town. That single fear is what drove all of Tuesday's selling. So how real is that DeepSeek threat? Careful here, the headline outran the facts. Reuters reported the startup is developing its own AI chip. Developing, not shipping. There's a canyon between a design on paper and silicon running data centers at scale, and that canyon is measured in years and tens of billions of dollars. But markets don't trade the finished product. They trade the story. And the story on Tuesday, in 5 words, was this: the moat is leaking. That was enough to erase $100 billion in an afternoon. Samsung's numbers poured on fuel. The whole memory and chip complex sold off as a block. When one big name in the group stumbles, the algorithms tend to dump the entire sector at once. That's the part retail investors miss. On days like Tuesday, you're not watching a verdict on Nvidia specifically. You're watching a machine that treats every chip stock as one giant trade, throwing out the good with the bad, indiscriminately. And here's where it gets interesting: that blind, panicky selling is exactly what set up Friday's reversal. Look under the index and there was another crack. While the megacaps eventually recovered, the Russell 2000, the small cap gauge, the real economy's actual temperature, fell on Friday, down 0.5%, while everything else was throwing a party. That divergence matters more than it looks. It tells you this rally is not broad. It's a handful of AI winners hauling the tape higher while a few thousand ordinary companies sit it out. A market can run on that narrow leadership for a long time. Until, one day, it can't. Then there's the geopolitical overhang, which never fully cleared. Even after Wednesday's headline, the ceasefire talks stayed alive but fragile, the White House saying it would keep talking while insisting the truce had ended. Oil, though, held relatively steady, with U.S. crude near $71. And that's the real tell. If traders genuinely believed the Middle East was about to erupt, crude would not sit still. The market was nervous, yes, but it was not panicking. Hold that distinction, because it's the entire week compressed into one line, and quietly, earnings season was creeping in behind all of it. Delta kicked things off, beating estimates but flagging heavy fuel costs, a blunt reminder that outside the AI bubble, plenty of companies are still grinding against real-world math. So by Thursday, you had a market yanked in three directions at once: dirt-cheap AI names, a shaky ceasefire, and an economy that looked fine on the surface and tired underneath. Something had to give. On Friday, it finally did, and against almost everyone's read, it broke hard to the upside. Friday was the whipsaw. The same Nvidia that traders were dumping on Tuesday ripped 4% higher. The S&P climbed to 7,575, a record close, up more than 1% on the week, after being underwater just 2 days earlier. The Nasdaq followed it up. In 3 sessions the mood flipped completely, from the mode is leaking to buy anything with a GPU inside it. Blink on Tuesday, look again Friday, and you'd honestly have no idea a sell-off had ever happened. That is how fast this market changes its mind. And Nvidia wasn't alone. Meta was the other engine. The stock jumped about 6% Friday and closed the week up nearly 15%, its best week since early 2024. Now think about what that pairing is telling you. The two names leading the whole charge are the company that sells the AI shovels and the company spending billions to buy them. When the picks and shovels stock and its single biggest customer rally together, in the same session, the market is casting one vote. The AI spending cycle is not slowing down. But the real signal, the one I promised you at the very top, didn't come from a stock that was already public. It came from a brand new listing. On Friday, SK Hynix, the South Korean memory chip maker, made its debut on the US market. And it didn't just open green. It opened at $170 a share, a pop of more than 14% right out of the gate, on day one, in front of the entire world watching. Now the number that actually mattered. That listing raised $26.5 billion, the largest US listing ever by a foreign company. Sit with that for a second. In the exact same week traders were panicking that AI hardware was doomed, public markets handed a chip company $26 billion and bid it up double digits on its first afternoon. You cannot fake that. That's real money, in enormous size, standing up and saying the AI build-out still has a long, long runway ahead of it. So the week that opened with a chip scare closed with the biggest chip IPO in this market's history. That is the whipsaw in a single sentence. The fear was about the moat, the money voted on the demand. And when fear and cash disagree that violently inside 5 trading days, it usually means one thing: the sell-off was emotional, and the buying was positioning. Wall Street didn't actually change its mind about Nvidia this week. It only changed its mind about the price it was willing to pay. So what does Nvidia do next? The real test isn't this week at all, it's August 25th, after the close. That's when Nvidia reports, and the whole argument finally gets settled with numbers instead of headlines. Wall Street is looking for around $93.5 billion in revenue for the quarter, and just over $2 in earnings per share. Beat that convincingly, and the trillion-dollar route looks exactly like the buying opportunity Goldman called. Miss it, and the moat fear comes roaring straight back in, and here's the asymmetry worth watching into that report. The stock sits near $200. The average analyst target is north of $300, implying something close to 50% upside if they're right. That is an enormous gap between where Nvidia trades and where the people paid to cover it think it belongs. Gaps that wide don't stay open forever. They close one of two ways: the price rises to meet the optimism, or the targets quietly fall to meet reality. August is when we find out which. So here's what that one signal was, the one I told you to watch for at the start. It wasn't Nvidia bouncing, and it wasn't Meta ripping. It was a brand new chipmaker walking onto the Nasdaq and pulling $26.5 billion out of investors' pockets in a single afternoon, the largest foreign listing this market has ever seen, while everyone else was still arguing the AI trade was finished. That's the tell. The fear made all the headlines. The money quietly wrote the biggest check of the week. Now watch which one August proves right. That's the story. If you'd watch one more like this, hit subscribe and I'll have another ready soon.